What's up, traders? Zach here from the Trading Network. I hope you guys are doing well. I have an interesting video that I think is going to be very helpful for you guys this evening. And the topic of this video came directly from one of my mentoring sessions today. Today, I was explaining to one of my mentoring students that it is quite simple to gauge the probability of conviction or the lack thereof based on looking at where we are opening related to the prior day's regular trading hour session. So just to make it very clear here and start us off, there are only 5 positions that we can open in relation to the prior regular trading hour session, okay? And I'm going to use this profile as an example, and I'll discuss this one as well. But let me just break it down here. So position 1, this is below range and value, right? You can see this is the entire regular trading hour session. And if we open down here, we are opening below the entire range, and by relation to that, we are opening below range and value. That is gap down. We can open gap up, which is entirely above the prior range and value area. We can open within value, which is inside the value area, right? Here's the value area notated by these blue lines here. We can open above value area, but within range, which is right here, right? Number 4, we are above the value area, but we are still within the range. And last but not least, we can open below value, but within range, okay? So let's start with a gap scenario, okay? And we'll start with a gap up because we actually had a gap up on this profile right here. So you can see this is the O period, right? And let me just zoom in real quick so you guys can actually see what I'm talking about, right? So on this profile, the way that I have my profile set up, O shows us where the market opened. When the session is open, C shows us where the current price is. And you can see here, because this session is closed, C shows us where we closed. So we opened all the way up here, and we ended up closing right around the lows for the day. So when we open gap up, that is essentially giving us 2 high probability scenarios. Scenario 1, we open with a gap, or more accurately, we open with a gap, and we either continue to move in the direction of that gap almost immediately upon open. If we do not move rather immediately in the direction of the gap, to the upside in this case, if we are gap up, then the probability shifts to a close of the gap. Now, a gap close is going to be a move back down to the prior range high. When we are gap up, the gap close level is going to be the prior range high. And when we are gap down, the gap close level is going to be the prior range low. So if we open gap down, just as an example, if we do not almost immediately start trending or continue trending to the downside, the probability shifts to a move back to the prior range low to close that gap. So the topic that I want to explain and continue to expand on here is how we can use this relationship between our opening price of our new regular trading hour session related to or compared to our prior regular trading hour session. So there are only 5 different positions that we can open in. We can open gap down, that's 1. We can open gap up, that's 2. We can open within range and value, which is inside the value area. And if we open inside the value area, we are, of course, opening in range. We can open above the value area, but still within range, like so, above here. And we can open below the value area, but still within range. Now, how I like to think of this is I like to think of these different positionings directly related to conviction. And I think of this in my head kind of like an odometer on a car, right? So when we open within range and value, which is number 3 here, right? That is within the range and also within the value area. That shows very little or no directional conviction. This means that we are more likely to range between the value area high and low until or unless we break one of those levels. Now, if we open above the value area, but still within range, or below the value area, but still within range, the possibility or the probability for directional conviction slightly increases, but we are still technically higher probability to range until or unless we break the highs or the lows of that prior session, right? So if we open here, my thought is I'm looking to play a larger range until or unless I see a break and hold below major levels in the case that we are opening with, a positioning that is below value but still within range. So if we open here, my thought is, okay, well, I'm going to look to see if, the prior initial balance low holds. If that doesn't hold, then we're likely to get a test of the low. And if that breaks, then we are likely breaking out of the range and likely, even more likely, to see some directional conviction. Okay? So how I think of this as far as the conviction meter, that's what I'm going to call this, the conviction meter, and pardon my poor artistry here, but I think that this will certainly help get the point across. Consider that this opening within range and value is basically no conviction. Either number 5 or number 4, this is slowly getting closer to essentially a 50-50. We are still within range, but we are above or below value, which slightly shifts the conviction meter to the right, closer to that 50 or the 100 level. When we open outside of range and value, like number 1 or number 2, that shifts the conviction meter significantly further, almost to the end, almost maxing out the odometer or the conviction meter, if you will. So a below range and value, a gap down, or an above range and value, a gap up, is the highest directional conviction positioning that is possible. You can't get any higher probability for directional conviction other than opening above or below the prior range. Now, just to make this, or help make this make a little bit more sense, one thing that is important to keep in mind is that we still don't know the direction of the conviction, right? So if we open above the prior range, like number 2 shows here, we know that directional conviction is currently high. And when directional conviction is currently high, we know that trending price action is the highest probability, right? But we can open just like we did here. Let me erase this real quick. So we opened up here, right? And this, I'll just clear this and redraw this. So we opened up here. Right? So this is a gap, essentially, between our new opening price and the prior range high. So we have 2 options here. If we open up and see conviction in the same direction of the gap, then that tells you, hey, we're likely to just follow that trend, and we can take long opportunity zones or whatever strategy you're using to trend follow, and things can be pretty simple. On the flip side, if we open up and we get rejected upon open with a gap up, then the probability shifts to closing and moving back down to close that gap at the prior range high. So this is just one simple reason that I use the profile every single day, create market profile trade plans, and consistently every single morning look at where we are opening related to the prior range. Okay, we can get substantial edge. We can have a map for the day. We can have if-then scenarios for the day simply by looking at where we are opening relating to the prior day. Okay, so on a day like this where I know that we're opening gap up, it's very, very simple. It's actually the most simple days because I know that if we don't open and continue to trend, then the probability shifts dramatically to a gap close. And I either have long opportunity if we can, move and hold above these prior levels. And this was our line in the sand level for this day. So this was the November 1st regular trading hour session. This was the October 31st into the November 1st overnight session. And our line in the sand, you guys can go back and read our trade plan, was the overnight high at 11,614. So our thought was if we could not move and hold above this 11,614 level, we were very likely to move back down and close the gap. And it even offered quick short opportunity for a rejection of the overnight high down to 11,587, 11,551, and then of course finally that gap close. And we got continuation much lower, and we took out this entire regular trading hour session beforehand, as well as that overnight profile. So the next example that I want to show you guys is when we are opening within range and value. When we open within range and value, there is a high likelihood that is going to be an inside day or a ranging day. And a lot of times you can very simply look for longs at the value area low and look for shorts at the value area high until one of those levels breaks. That is quite literally it. A lot of people think that market profile is very complicated, and I know it looks, pretty complicated with all the letters and stuff, but if you dig into it a little bit, it's pretty darn simple. There's a handful of profile open positionings. There is a handful of market profile open types, which I will expand on further in my market profile course that is coming soon. And this is kind of just a precursor to the course that I'm releasing. I want to give you guys an idea of how I'm breaking this information down, how easily understandable it truly is if you take a little bit of time to break down the profile, read some profile books, or take my course, or both, I think most ideally, because this is information and data that most folks aren't looking at when they're trading. Most folks look at a profile and they think that it's way too complicated. And shout out to Eric Crown, but Crown puts it very, very elegantly. He says that, things like market profile, things like trading options, they're typically 1 degree too complicated for most people to want to learn. But once you dive in, it is certainly not rocket science by any means. It's really just memorizing what, each of these positionings mean in relation to the likelihood or the directional conviction. So typically when we open below range and value, I am looking for the value area low to act as resistance. If it doesn't act as resistance and we move back into value, then that is likely going to give us trade opportunity back up to the POC, back up to the value area high. We wait to see if the value area high gets broken, and that likely offers long opportunity if it does break and hold as support to, the regular trading hours high of that session. So you can see the pattern here. You want to think of this as a meter. And if you guys are already using the profile, then you should be familiar with the gap up, gap down, all this lingo. If you're not familiar with the profile, I want to encourage you to study as much as you possibly can and really take a deep dive into the two-way auction process that is market profile analysis. This has absolutely changed the game for me because every single day, most people don't have a plan. Most people have a system that they trade if they've gotten deep enough into trading, where they're looking for divergences at major levels or, a 3-step shift like we trade, bull div or bear div and either a higher low or a lower high. They have a system down and they know what their triggers are to take trades. But if you don't have context for the day, if you don't have overall market context or a bird's eye view, as I like to say, then you're kind of going in blind, honestly. So I wanted to show you guys this screenshot that I sent over to one of my mentorship students. I drew this up while we were on our call, and I think this is going to be very helpful. So feel free to take a screenshot of this video, save it, print it out, and try to practice gauging where we are opening in relation to the prior session, prior regular trading hour session, to be precise, and see how often these things come to fruition. See how often we open within the prior range and value and range all day. See how often we open above or below with a gap up or a gap down, and we have directional conviction in one direction or the other. So you can see here, I went a step further in our call, and I drew basically the profile open types, or the positions rather, and put them under the conviction meter, right? So opening in range and value, basically zero conviction. Opening in range with above or below value, right, which would be here or here, once again, that is, call it 50% conviction. But we have a range regardless. If we open above value but within range, look for these areas to act as support and resistance, and you'll get trade opportunity if one of them breaks to either side. Same thing with the below value but within range. Watch for value low to be resistance and your next level lower to be support, whether that's an initial balance level like I have here, or whether that is a range low like I have right there at 11,367. And you can see here that when we open above range and value with a gap up, or below range and value with a gap down, that is the highest possible directional conviction open positioning. And we have really one of two situations, as I explained. We can open with a gap and continue in the direction of that gap, or we can open and move back down to close the gap, which would be right here. And that's exactly what we did on November 1st. So I will end this video here, especially because I am going to be expanding and I have a lot more examples of these for you guys in my market profile course, which will be available very soon. Keep an eye out for some announcements in that regard. But I wanted to, like I said earlier, plant the seed and show you guys that it's really not as complicated as it might look to firmly grasp the profile and gain edge. You know, you can use this. You can take exactly what I've discussed in this video and use it tomorrow. Watch where we open tomorrow. See if we open within yesterday's range. Currently, we are operating below the value area low, but within range. And we do have, of course, quite a bit of trading activity to take place before New York session opens tomorrow. So who knows? We might open gap down. We might open within range. We might open, you know, within range below value. We'll see. So keep an eye tomorrow on where we open compared to today's range. And that just might give you some pretty excellent edge. So I hope this is valuable information for you guys. I hope that you can quite literally watch this video tonight and use it tomorrow and every single day in your trading moving forward. And I just want to reiterate one more time how much of a game changer or a life changer market profile analysis has truly been. It gives you a bird's eye view of the market activity. It gives you a plan or a map for every single day. It gives you probability on one side or the other, ranging versus trending. We have ideas, we have context for the market, which makes it that much easier to execute our trades and check our technical boxes if we have an idea of who is in control or if there is any control and how we can use that to our advantage. So if you guys do enjoy this content, please feel free to like, subscribe, and hit that bell notification to get notified every time we post videos. If you want to learn more about what we do here at the Trading Network, check out thetradingnetwork.io, where you can purchase access to the TTN Pro Trader Bundle, where you can get the fundamentals of futures trading, the Trading Network proprietary indicator package, as well as lifetime Discord access, all in a bundle for a discounted rate. You can, of course, purchase those standalone as well on our website, in addition to one-on-one mentorship with me, where we meet every day on Zoom, Monday through Friday, for 1 hour for either a 4-week or a 10-week program. And it is a passion of mine to help traders learn this stuff and get consistently profitable. If you guys have any questions, feel free to shoot us an email at info@thetradingnetwork.io. You can also drop a comment down below, shoot a DM on Facebook, Instagram, Discord, anywhere you can find me. We will answer and get back to you and help any way we possibly can as soon as possible. Thank you guys, as always, for taking the time to watch this content. I appreciate you very much, and I look forward to seeing you in the next video. Much love.